So this is quite eventful Monday morning, quite exciting as it 99% of the time is on oil. So this morning we came to the markets and we said, too bad, so sad, we cannot short oil. Oh no. We knew how dangerous it is, especially considering that price at any moment would be reaching the end of the minor trend. Oil spelled out that this is extremely important level since last week. So, what did we do? We waited patiently. We've taken only long trades today on oil. And this is my trade. It reached currently reversal zone. And oil is reversing. Here it is. 30 ticks on oil. Know your levels and know where to enter and know where to take profits off the table. S&P is a very different story. We've done a very quick and very painful short this morning for 1 point. We knew extremely well that our only position on S&P this morning is short. S&P struggled and eventually collapsed. Second trade on S&P was very quick and very painless long. I'm monitoring for another point re-entry. So far, 4 trades this morning already. All trades reached our targets. So buckle up as I look to re-enter S&P again. Oil did not reach my trail. We're still in a trade on oil. If you know where reversal decision point 1 is, do not ever forget this is the most important level in the market structure. We always have minor trend, we not always have major trend. It is not to be ignored ever. This is a rally we've taken advantage of in a trading room last week, and this is a rally we've taken advantage of and we are in a trade currently. So, does price have enough juice to blast through reversal zone? It's struggling as our trade reached this critical level. So let's talk about the most critical component in your trading, and let's talk about drastically different formations on S&P versus oil. S&P cannot be more clear that it's collapsing drastically lower levels. No question about it, based on what S&P is telling us currently. Oil, this bullish rally may go for the next few hours, maybe even a whole lot more, maybe for the remainder of the day. So, both instruments reach the end of the minor trend, but both instruments trading drastically different formations. So, we're still long on oil, and there is a very good reason why we closed our trade on S&P, because our trade was showing us clearly it was not going much further. You can't pull 10 points out of 1 point structure. It is simply the case. So, still trailing oil, 40 ticks later, monitoring S&P carefully. As you can see very clearly, we are out of our trade on oil as our trade reached reversal zone. 40 tick trade long based on hourly chart. Know your levels, know what not to enter into, know where to take powerful reversal trades. That's simple. So this is S&P daily. This is where buyers stepped in from, correct? And as we know in Alpha Wave Trader method, this is the least important level between the end of the minor trend and the end of the major trend. So it's extremely important. Same formula, correct? Very, very powerful, but not as powerful as this or this one. Support level. Exact same level where S&P collapsed from on hourly. Currently S&P reached reversal zone. I am expecting a pullback. So all of the levels spelled out by the price far in advance. So before I close for today, I would like to highlight what we accomplished today. Today we accomplished 3 trades on S&P. Our bias on S&P is a very, very, very bearish. The ideal point of entry was absolute massive, massive worthless chop. We had taken our very, very first initial short, and then we had taken 2 long trades, one from this level and second one from this level. So that's what S&P is doing currently, reminding you the importance of reversal zone. Oil had done drastically different structure. Oil hourly reached the end of the minor trend. We had taken only 2 long trades on oil. So this is in summary what I've done so far since the beginning of the month in our trading room. 8 trades on S&P, 7 positive, 7 reached our targets. Do not ever get fooled. Know when to move your stop to break even. Today was extremely jittery day. We still managed to pull at the bare minimum 1 to 1.5 point on S&P. Oil, 2 trades so far this month on oil, 7 trades total, 5 positive. So have a marvelous afternoon, everybody. Next class is starting in 15 minutes. Look forward to seeing you there. Remember, all that matters is price. If you know the price, you know all the targets far in advance. Exact same level that you witnessed respected on S&P for the last 2 hours is the exact same level where Euro had been dancing, starting with bullish corrections since first week in July. Is this something meaningful? Euro still in bullish corrections. I still do not see spectacular reversal. But what I also do see extremely clearly is the fact that S&P weekly is heading further south. S&P will be revisiting 1911.25. This will remain as critical on weekly as you saw this level respond on hourly on oil. Formula remains the same. Will S&P stage more powerful bounce? Or will it be only temporary pause and S&P will collapse to decision point 2 and drastically lower down? So buckle up. We'll find out. This is very, very important week on S&P. It is not to be taken for granted. S&P remains extremely jittery. On daily chart, S&P is heading until 1942 area. And as you could see, the magic of the puzzle, that's where the bounce came from. Decision point 2 spelled out by the price since long time ago. Have an amazing afternoon. See you in the trading room tomorrow.